All right. Good evening, everybody. It is Sunday, March 10th, right before midnight here on East Coast time. Just got back from seeing Bon Jovi in concert with my lovely wife, and thus we're starting the show a little bit late tonight. I've got my co-pilot, my dog, back from college. He was at Vanderbilt for the last 6 weeks, so hopefully he won't be barking too much during this. Hope you all had a great weekend and have been enjoying this ride in the marketplace. My name again is Jeff Scott, and welcome to my HGSI weekend review. There's my email address, and hopefully I'll be more brief than normal today, but who knows, I always get carried away. So education purposes only. Anything I recommend in the spirit of education, not investment advice. I'm a doctor, not a broker, and I am not officially affiliated with any software vendor or trading company. The tools I demonstrate are those that I use in my daily trading, and I have paid for all the tools I will show you. I think I hid my desktop. If not, I'll hide it when I get out of the PowerPoint. But I have a lot of programs. What I need are a few. I either need TradeStation or thinkorswim for my real-time trading. I use both mostly because I have a lot of things I paid for in TradeStation that I have not yet duplicated in thinkorswim, but TradeStation has a fee and thinkorswim does not. So, there's a big advantage there. HGSI is what I use for my analysis, and I'll be using much of tonight. EdgeRater is one of my favorite programs for doing some back testing, but also it's got some really neat new features I'm going to show you today from the EdgeRater Club. Seasonal analysis, I'm not going to go into any programs, but I took a number of screenshots that I thought were important in discussing where I think the market's going to go. And then Ian Woodward and Ron Brown with Woodward and Brown Investing. I've learned much of what I've learned from these two. They sell a newsletter, and Ron has some daily market updates. And I'll show you where to find Ron's weekend review, where he did a great discussion of top-down investing today, which is what I do, and also Ian's blog. All right. I'm not going to spend a whole lot of time here because I do this on a weekly basis. But if you're new, these are some of the influence I've had. Ian Woodward and Ron Brown, which I'll talk a lot about tonight, Alexander Elder, Van Tharp, Bigelow, Katcher, Morales, and O'Neill, for just a few. Here's some websites there. This weekend I had the luxury of hearing a guy named Hank Swinsinski, S-W-I-E-N-C-I-N-S-K-I, who has a book called The Professor's 1-Minute Guide to Stock Management. It was quite fascinating. I actually learned a lot. Maybe we'll change up some of my techniques from what I learned to him. I continue to learn, and as it says at the top, don't rely on gurus, but be your own guru. Lesson taught to me early on by Ian Woodward. I've had this here before, so I'm not going to spend much time. This is for fun tonight. I have no idea what the market will be doing tomorrow. When I say something's a buy, it means right now at midnight before the market opens. To me, it's kind of like sailing. The market is the water, all right? The wind is going to tell me what direction the market is going. The sail is going to be my industry group or sector that I'm working with, and you know from sailing that it helps to put your sail the right direction in the wind if you want to go in a specific direction. And then I'm going to be the stock, and I'm going to go in the direction most likely that the wind is pointing me. If I put my sail in the right direction, I get to go in the direction I want. So that made absolutely no sense to me either, but I thought I'd try to be different this time. But top-down investing means you want the market in your favor, whether you're long or short, the sector and industry to be following the market in the direction that you want to go, unless you're contra, and then the stock, buy the best stock in the sectors that are doing what you want them to do. When I say something goes on my buy list, it just means I'm going to watch it tomorrow and add to it during the week to see if there's any signals on which I automate as listed down on the bottom that trigger me to go and buy and sell a stock. As always, I'll spend most of my time on the market update, looking top-down, investing, a couple of shortcuts perhaps, and then say goodnight. All right, I'm going backwards, my bad, I'm sorry. I always like to highlight Woodward and Brown Investing, so let me get out of here for a second, go to the website. I'm only affiliated with these guys on the basis of long-term admiration, respect, and thanks for making me a lot of money. Here's the website, High Growth Stock Investor. You'll notice you can get a 30-day trial, no credit card required, so you can repeat everything that I do here. I always like to point out you need to go to the Learning Center, to the add-ons, and make sure you install the latest ones that are here, so your charts will look something like what I show you here, or at least can. Under reports, you'll see two names, Ron Brown, who, as I mentioned earlier, did a weekend review, a top-down analysis of his weekend review, which you can either watch live or download here. I also have a bunch of things that I've done on the program, with the program. My weekly reports are here going back some time. Sometimes, like last week, I get it right. Sometimes I don't. And then Ian's blog is here. Ian's just great, and he gives you a great sense of where the market is. Ian's had a lot of years of trading, and he's learned from some of the best. I'd say early on he was a disciple of William O'Neill, but combining this with the best of Arms and Bollinger and others of the masters, Darvis, etc., Ian has really put his own special spin on investing. One quick note, if you've not been to one of their live meetings, I know I talk about it all the time, and it might be sounding like a record that keeps going back to the beginning, a broken record, but it starts in 2 weeks. I'll be there. Special guest, Fred Richards, who is just an incredible investor with a long history of some great choices, and when you see his cost basis on some of his holdings, you'll know that there is a story about buying and holding good stocks. Helps when you buy a big portion of them and you know the management. And you also have Gil Morales from Trading in the Copilot with the Morales and Catcher dudes. He's an excellent speaker, and Chris White will be talking about Edge Raider. All right, enough of that. Back to my PowerPoint. So I always have to have a sense in my mind of where this market is. And, you know, stocks are cyclical. And, you know, if someone had to ask me where I thought we are and what we're going, is we've had our little pullback. Now the question is, are we going to pull back a little bit more? We only pulled back 3 or 4% and we got out of it. And if I had to predict, and I'll show you why I'm kind of bullish for the next 4 to 6 weeks after a small correction. I think we've got a 3 to 5% pullback in the cards coming soon. And then I think we'll have a blow-off top. A lot of times big bull runs end with some emotional exuberance, and I don't think we see all that right now. And then perhaps, as many of the Elliott waivers are predicting, we might see a pretty big sell-off. So as I look at this, a small pullback, a run-up, and then perhaps a fairly significant correction. You know, how do I trade those? Well, I have to know where we are, and I won't know where we are until I watch the market in the morning. But I know that if it's an uptrend, I want to buy pullbacks. I want to set my stops a little bit below the pullback. And the guy this weekend called these hockey sticks. Hank called these hockey sticks. It's funny, as I was watching his presentation, we used similar slides. So whether you want to call these hockey sticks or what, pullbacks are what I like to buy on the uptrend. On a downtrend, if you're going to go long, you're going to get your lunch handed to you, but you want to go short on retracements. And again, hockey sticks. And if you look at the complex Elliott wave patterns, you'll see over and over again hockey sticks. Here's where we spent perhaps part of last year at the end of Darvis spots in a range trading, where we broke out of the range pretty quickly after the beginning of the year when they settled the fiscal cliff, or as they usually do, they kick the ball further. So am I bullish? Am I bearish? I think I told you what I think is going to happen, not that I know anything. The bear case, we still have our deficit. It gets bigger and bigger and bigger. The sequestering was not fixed. Now, it's funny when it was put in place. It was invented by our president as being something that would be so horrible that even our Congress, which can't agree on anything, would have to fix it or fix things so it wouldn't automatically kick in. So I'll put Congress as another part of the bear case. As someone would have to do something about the deficit, and as a fiscal conservative and social democrat, I would say we have to increase taxes and cut services and cut expenditures and entitlements, but you know, we don't have anybody that's in the middle in Congress, so it's one or the other, which means nothing happens. I think higher taxes, what hit me on that was sitting in an airplane this week in coach, no upgrade on that flight, and sitting next to some guy who was complaining about how his income has dropped after the first of the year. So I looked at him and said, well, you don't look like you make over $250,000 a year. And he reminded me that some of the cuts or some of the eliminated taxes that came back in January did not just affect the rich, and that he was having challenges and saw his take-home pay drop. I think that's important to know, that this is hitting the common man, which is part of the bear case. Obamacare, a lot of things to like, frankly, as a physician. Eliminating caps on lifetime caps on insurance, which was a ripoff to unsuspecting consumers. Insuring your kids to 26. No pre-existing illnesses. Great stuff. Problem is, we got to pay for the new 30+ million people to get insured, which will add to our deficit. Europe, you know, do we believe they're out of their woods? You listed some of the rhetoric and how much better they're getting, but then every once in a while you hear about the next Spain or Italy. The market overbought? Yep, the market's overbought. Sometimes overbought markets get overbought even more. I think we are due a correction, but what do I know? You got to trade the market you get, not what you think you have. And then sort of the paradox here is we need a Goldilocks time. We need the economy to grow slow enough, but to grow, so that the Fed doesn't stop easing. And the employment numbers Friday, I almost thought we'd have a down day, because even though they were positive, there was a pretty big beat. It may be because we lowered the previous month, and also because no one actually believes what we get told by our government, that the market didn't trade off. But the first sense, I believe that the Fed's going to start to tighten or back out on the easing. I think you're going to see a response, a bad response in the market. There's a bull case. I do believe the economy is slowly improving. The Fed is still in easing mode. Europe clearly is improving. The euro is more stable. But I want to talk now a few minutes about seasonality. And those who've been, you know, I've been doing this thing for years, and I've been looking at a lot of different programs, and a lot of programs have started to add seasonality. And I think it's important to know what the market normally does at this time of year. I mean, sell in May and run away. It's not May yet. We're still in March. So what could we expect? This comes from OmniTrader, which you can open up any stock, and you could basically build out these boxes. And these boxes go back years, 10, 20, 30 years, depending on what you ask it to do. And it tells you performance each year by month, and then it rolls it up so that you can see up or down, the percentage of times that it went the way, and then breaking down on a monthly basis. So for example, in the month of April, the S&P 500, over many years going back to 89, so 24 years, in April, it's averaged an increase of 1.9. It's also been positive over 70% of the time. Last year it was down a little bit less than 1%, followed by a pretty bad May. So a really substantial market correction there. You got 7% taken off the S&P 500. 6.1 in 2002. Interesting, in 2007, 2008, and 2009. No surprise in 09, but maybe 08 and 07. April were very strong months. So April historically is a strong month in the S&P 500. On the Dow Jones Industrials, April's up 2.4% on average. It's up 2/3 of the time. And the biggest up was 10% in 1999. And the biggest down looks like it was about 4.4% in 2002. No guarantee that it goes up again, but I like to play the odds. And lastly, the NASDAQ, fairly equivalent March, April, and May, up about 1%, only up about half the times. And there's been some pretty big pullbacks. 2000 for one, the NASDAQ was down 15.5%. In fact, God forbid we have to live through many more years like 2000. The NASDAQ, despite having a great February being up nearly 20% and a great June of being up 16%, the NASDAQ ended up down 40% in 2000, which, as bad as it felt in 2008, was actually a little bit worse than it was in 2008. So why am I optimistic after perhaps a small pullback? I'm optimistic because the seasonality says we're going into a strong part of the year. Here's from, I'm not sure what I'm supposed to say, provided by or used by, but since I own the program, own the software as a user, I don't know if I have to do anything, but this is from Magenta Trader. And what I've done in the next 3 slides is I've highlighted the ETFs, the spiders, and the various ETFs to give us an idea of where this market might be going. So we'll start with the spiders for, or the ETFs for the major market indices. So just to give you a bearing, the green and the red are candlesticks of where we've been. The bands are created by the program. They're called magenta bands, and we don't really know what the formula is, but they have to do with volatility. And like things such as Bollinger Bands and other bands, most of the movement of a stock is within the band. So one of the things that we look at with Magenta is range trading. And based upon range trading, you might expect some pullbacks. The yellow line is seasonality. And what this shows us is the next 30 to 45 days are extremely strong times in the market for the S&P 500, the Amex, and the Russell 2000. Now, this is calculated, again, using algorithms that are not publicly available, but that seasonality number takes every day over the last 10 years and gives it a score of up, what percent up or what percent down, adds up all the years, and basically is essentially plotting a given movement on a given day over time, and then predicting a price move based upon the historical performance. And what you can see is that all the indices are trading near the upper of their channel. Now, when a market gets exuberant, the channel has a tendency to increase in its height. But, you know, as I said, it wouldn't surprise me, perhaps like we saw here, a pullback to the center line, and then to see a final blow-off run consistent with the seasonality. If you look at the individual sectors, you know, it's hard for me to predict this market dying with the, again, everything we look at is due a pullback. Everything is riding up the top. As you can see, it got to the top here, pulled back sharply, and came back up. I'm not be surprised to see that again. Consumer discretionary, consumer staples. So this is a scanner that's looking for good times and bad times to go long or in red short based upon history. And you could see a lot of green, staples, energy, financials, although the financials get whipsawed a little bit in the next couple of weeks. All of these are seasonally strong going into this beginning of the second quarter. Energy, this is it. We are in the high season of energy before, as they switch from a winter to gas fuel. And again, we know with the refiners, there's a number of things going on. But energy is usually very strong this time of year. We look at healthcare. We look at the industrials. We look at basic industries and technology, all of them showing us the same pattern of a lot of strength, a lot of green, a lot of traditional positive times from a seasonality perspective. Notice technology, the bands are actually pointing down. So this would be counter to where the stocks have been trading, and you know technology clearly has been weak. And frankly, when I look at the stock price compared to seasonality predictions, it's not matching up perfectly. So this could be, it may not be as strong a signal for technology. But again, everywhere is trading up near the top of their bands and is due at least a small pullback, which is sort of what I predicted earlier. And we can look at utilities. Now, weakness in gold. Gold's been weak for some time, and this would suggest it's got a little bit longer to go. Silver looks a little stronger from a seasonality perspective. And oil, no surprise, seasonally strong, especially in light of the what we saw for the ETF for energy. So before I move into charts, be your own guru. Investing is a business. Make sure you have the right employees, which for me are tools and software. Continuing education matters, and trade the market we have, not the market you think we should have. So everybody knows at this point I really like to go and look at what the futures are. One, because I have a portfolio that I trade, but also it gives me a nice thing to talk about if there's anything going on with them of interest. When I looked earlier, they had pulled to pretty much to close to flat. Let's take a quick look. And they are, as I said, pretty close to flat. Russells have a little pop to them, but it's early, and that may not be too meaningful. Now, I also like to look at my performance compared to the rest of the market, not to show off or show you when I have a bad week, but it gives me a sense of whether the types of stocks that I trade are working or I should be going to cash or doing something differently. And I trade growth stocks. I learned from HGSI, which for people that are unfamiliar with HGSI, it's very familiar to the thoughts and wisdom from William O'Neill from How to Make Money in Stocks. As you can see, as I look through a number of different watch lists that I create over the week, as you go through, you can see that there are very little red. So it was a very good week in the market. The S&P 500 was probably even a laggard compared to the NASDAQ, but the S&P 500 was up 2.17%. This is assuming, and it may be different than what you hear on CNBC, you bought at the close on Friday the 1st, sold on the close of Friday the 8th, and you bought $5,000 worth of each stock. So it's weighted this way, equal dollar weighted, which is different than the indices are weighted. So as I look through, I find that the stocks that I had on Friday last week actually outperformed the S&P a little bit, and as I'm sure your portfolios did as well, the majority of my stocks I owned, over 80%, were positive. Now you look at the 50 and you scratch your head. Just leave it. I have other people that manage my money as well. Some of those include theirs. I have short and long positions. I have lots of hedges. And I have way too many positions, but I've got a fair amount of money that I manage, and it allows me to maintain a position size that fits my comfort level. And some of my accounts are more investments and some are more trading. The HGS 100 was at 2.48, so that tells me that the type of investing I like to do outperformed the S&P 500, and the IBD 50 had a great week, up 3.5%. Up near the top, Bible Gap Bucks from Morales and Catcher. This is, I mean, almost amazing. These are the ones, well, you know what? Ignore that. I just realized that I included the wrong set in those, so we're just going to not, I don't know how I put, I picked the ones that were on that day. So ignore those two. Of course they had big days. Those are the days that they had their pivots and their Bible gap ups, but you could see what kind of a move those did. Squeeze filter was up 5.31%. The best of Woodward and Brown last Friday was up 5%, sort of proves the concept that stocks that our leaders continue to lead. The Bible gaps ups that were shown last weekend were up nearly 5%. Breakouts were good. Pullbacks ready to run were up 3.8. That's my favorite group, as our green candle lows, which was up 3.67. And the ones that I identified as potential buys on my review, 30 to 5 up 3.16. So I'd have to say that I'll take another week like that anytime. Anytime you're up 2% in a week is a good week. The interesting thing on my portfolio is that includes a lot of hedges, which were not up, as you might expect. All right. Another thing I'd like to do to get an understanding of the market is to go into EdgeRater. I'm not going to spend much time here except just to tell you what I see. If you look at, you break down the percent B to below the lower, above the higher, and then break between the two up to 10 groups, you can see that 80% of the S&P 1500 is trading above the midline of the Bollinger Bands. And in a bull market, it's common to see stocks oscillate between the upper band and the mid band. 80 is a big number, but it's consistent with the strong market. Where I'm a little bit concerned is we've now got over 16% above the upper Bollinger Band. And if 95% of the time the stocks are within the Bollinger Bands and you only spend 5% above or below, when you start to get a lot of stocks above, then it suggests that we're due a bit of a pause to refresh, maybe a slight pullback, which I think is in the cards. If you have Edge Club, you already are aware of this, but if not, there was every month he puts out an update. In this month, the update is about Morales and Katcher's trading templates, or trading techniques. The two books are outstanding books. And what this program has basically done is automated so that you can run it against whatever list you want on a given night. These are for market close on Friday. And you can get a list of all the stocks that meet the criteria, at least in the S&P 1500, for a pocket pivot, how long since the last pocket pivot, viable gap ups, what volume percent they were up. And then if you follow Morales and Katcher, they talk a lot about their 7-day or 7-week rule. And it gives you a sense of where to put the stop. And they look for days in violation. For example, if you're using the 10-day moving average as a stop, and your stock, because for the last 7 weeks you've been tracking above that 10-day moving average, if the stock undercuts it, you don't sell it that day. You don't even sell it at the open the next day. You sell it when it trades below the close, or sometimes actually the close or the low. I have to go back to the book of the day that broke the moving average. So if it bounces right back up, you don't get stopped out. So what a great tool that you can now automate many of these things, and you could also do back testing. Let's shut that down. I like to look at what Elder tells me about the indices, and I usually look at the NASDAQ, so let's just look at that real quickly, and then it's all HGSI for the rest of the night. So those who've been on know I've been concerned about the fact that we kept getting higher highs without getting a higher high on the MACD. And again, we're getting a higher high up here. At least the MACD turned positive, but it'd be nice to see it take out this height, the height over here, which it's nowhere close to as yet. So we'll see if it can reverse this bearish divergence on the MACD. But we saw, as I mentioned before, a pullback. I expect another one before maybe a blow off top. Maybe that pullback we saw here is the pullback we're going to get. So say bandwidth, I'll leave it up in case I want to go to it. If I start to have problems, I'll kill it. In HGSI, this is where I do most of my top-down analysis. I'm going to open up the warehouse. And I'm going to go into my top-down view. And I'm going to open up the major market indices. These are found in Woodward and Brown's views, which are down here. And I'm going to sort by raw combo, and it's going to tell me where the strength has been in the market. No surprise, the small stocks continue to do well. The weakness in bonds, volatility, and commodities. Interestingly, the bigger stocks, the S&P 100 and NASDAQ 100, also underperformed. One-day performance, gasoline popped up 2.6% on Friday after being down earlier in the week. Transports had a good week, a good day, which is sort of interesting in a good week with gas being up so high. Small stocks led the way from small mid-caps. Weakness, again, for the day, volatility was down 3.6%, was down 18% for the 5 days of the week. Strength over the week, small stocks again. All right. I like to then look at a number of charts. Let's start with the S&P 500 and get a sense of what this market is likely to do this week, at least based upon my early analysis. So what we see here is, as we've talked about before, we have a stock or a market that peaked up here, traded down to here. So in about 42 periods, it dropped about 9%. And then it's ran up now. 75 periods up 16%, partly why I think we're somewhat due for a pullback. And we've had a little pullback in here, which occurred over 8 days at 3.5%, which isn't really going to count as a big problem. One looks at weekly, and I'm going to get out of this view. Go into this, which has a longer period, and go into weekly charts. And let's scrunch this puppy up. We are now getting very close to what were the highs back in before the market declined in 2007. So we've really had a big move on the weekly, and I guess that might be my target before we get our retracement. And as it's very clear here, markets don't drop without retracing, and they don't go up without pullbacks. And we are starting to get extended about 300 points or so above the S&P, excuse me, the 200-day simple moving average. Go back to my favorite charts. Okay. So S&P 500 has had a big move. As I said, probably do a correction. Not at the highest point of the high jump, so it might go up a little bit further. It had a kahuna on Tuesday and really had a nice move off the 17-day moving average. The Dow looks just like the others. Shallow pullback, green candle low, and a big run-up. So the Dow closed at its high on Friday, up 4.5% in the last 8 periods. And if you go back to its green candle low, the Dow is up 15% in 75 days. If your portfolio, if you're long, is happy, or it better be happy if you're long, because this has really been a powerful market. NASDAQ, not going to spend any time here, pull back to the 50-day moving average and bounced. Again, all these are up into high territory. Obviously, the NASDAQ has a long way to go to get to all-time highs. S&P 1500, which is one of my favorite things to look at because it combines the 600, which is the mid-cap, the small caps, rather, the 400, which is the mid-caps, and the 500, which is the big caps. So it gives me a nice market view. And I'm sure it's right in front of my face, but I don't see it here. Here it is. It is right in front of my face. And you can see the same pattern, pullback not quite to the 50, which is what I was called for. Right now, a pullback to that 17-day and a bounce from there would be very healthy, but all these markets are in a powerful up move, which continues. The Russell 2000 probably being as strong as any of them. Again, shallow pullback, not even to the 50, running again. Very powerful, strong week last week on the Russell. So again, my feeling is you don't fight the tape. Right now, the tape says this market continues to go up. If I was a guru, which I am not, I would predict that we're going to pause here, and a pause might even be a gradual ascent, horizontal, or a small pullback, let the 17-day catch up, and then run again. But we may be doing a run now, and if you start to see the trajectory of the increase start to increase, become more vertical, it tells you that we're probably getting closer to the end of the run. Healthy market, but probably overdue a little bit deeper correction than what we saw here. I have some shorts, and every time I do something short, I'm getting it handed right back to me. Fortunately, I put in tight stops, and I've done some ETFs sometimes over the weekend in case we gap down before Monday. But this is a market that just likes to go up, and I haven't done real well on my shorts. Fortunately, my longs have done okay. All right, what else do I like to look at? I like to look at volatility, and I don't need to tell you it's down almost 20% last week. You know what that means. It's going to look as low as it's been in a long time, or sort of getting to where it usually bounces from. So it'll be interesting to see if the VIX bounces, if the VIX bounces, the market falls. So I think part of a correction, and every time we start to get a pull up, it usually fails. Maybe it breaks the 200 for a day or two, and it comes right back down. The dollar has also contra to the market, and the dollar pulled back early in the week. Actually had a great day Friday with, I guess, with the good employment. It was interesting that despite this, the market did well. The dollar is not always the friend of the market. Certainly, it's not a friend of commodities. And if one looks at, look at gasoline tonight. If one looks at gold, one can see that gold is sort of bouncing here on the bottom. And it'd be interesting to see if gold can hold here. But gold has been trashed as the dollar has been strong. All right, let's take a look at some industries and some sectors. Going to go down to industry groups. And as you can see, there's 146 groups. I'm going to go down to 2-day force up, and you can see that the majority of them, 97, are in this category. This is much higher than it's been over the last couple of weeks. And it's also a very bullish sign. Let's take a quick look at what's sitting in here. And we'll take a look at a couple of these and to see if there's anything interesting. So top-down investing is first you put your bet on where the market's going, and I'm not willing to bet much there. I think this market could go either way. Then you figure out which sectors are strongest or weakest, and then you buy or sell stocks based upon which way you think the market's going to do. So diversified financials, this is the big banks. Interestingly, only Citi gets in there. They went through their stress testing, all except for Alley, which I think has sold, or parts of it have been sold, did very well in the stress testing. These guys always get to the top because of their volume, and you can see the volume on this was 63 million shares. You had a number of pocket pivots. Everything is green, a big gap up on Friday. The only concern I have about Citi is it's in nosebleed territory. And if I look back, high jump bar hit, stock pulls back. High jump bar hit again, going sideways, and it pulls back. High jump bar hit, and it pulls back. So high jump bar is being hit, so we have to be wary that you're going to see this thing pull back. But just check one setting. Had some problems with, I put too many indicators in. Let's see. Still not showing. I'm just going to kill a couple things in this view, and let's see. I'm just concerned that my Bible gap up filter or indicator is not working right. Let me take that out. Take that out. This computer doesn't have a. Nope, still not fired. All right, so must not have fired. But multiple pocket pivots this week, all green. Citi is extremely strong. Let's bring down the earnings estimates. And you could see it's had some great growth this month. I mean, if you're not in the bank, Citi's group chart looks very nice, except with this high jump being so high, it would make me a little bit nervous. That was the only one above the index, so let's go backwards. Pharmaceuticals. You know, it's funny. I bought this one. I bought calls on this back when it was bottoming. And I won't even say on this month. I bought some way out of the money, like June calls for like, there were 35 calls. The stock was trading above 36, and I think I bought them for $2 a pop with 6 months time in them. It's just one of these, you know, the generic companies go in cycles. This has been historically a great company, an Israeli company. Doesn't have much earnings per share growth, but makes a ton of money. I bought it because it was one of my bottom fishing stocks that I like. And it popped this week, actually got above the 200-day moving average and held. Kahuna's a couple of days, getting up near the high jump area. I don't necessarily recommend stocks that have been in a downtrend. And this was purely because it was a cheap option and I thought a low-risk phenomenon. But my target is for this to get up to 48. So it'd be interesting to see if it's got another 20% in it. I don't believe they pay a dividend, but since I have calls, I wouldn't be getting any. It actually does 2.2% dividend. Also notice that all my momentum indicators turn green as well. J&J is another one that's had some strength. It's in a very nice run. Is it getting extended? Yes. You can see high jump hits. It pulls back. It's near the high jump. But it's a great run. You could give it some room down to the 17-day moving average. Everything is green. Not much earnings per share growth, but pays a nice 3% dividend. Certainly a like stock. I only like to look up to the index. I don't want things that are underperforming the index. Let me just see if there's anything here that came out on my reviews. This is an interesting company. IBD spoke about it not long ago, and it popped again. This guy's got some major earnings growth for a drug company. In fact, most of you know that I like to open up MarketSmith in the background. I don't want to get overly bogged down with those things today, but let's see if I can get that up quickly. All right, so I don't see this. Let me just type it in. Whoops, sorry about that. Just dropped the phone. Not a smart thing. The reason I'm doing this is I like to look at earnings estimates on this product because it gives me a little bit more back and forth. I get 8 quarters backwards with HGSI. This gives me 4 or 5 years, and it gives me 2 years going forward. So let's just look at BRX, and you'll see why I'm, you know, trades at a multiple of 15. It's growing a lot. If it makes this earnings, 15 times 5 is 75. It's an $84. That's a 20% move from here. The arrows up here tell me estimates have been increased. The worry about Valiant is that they're in big acquisition mode, and sometimes they put out new stock, new shares to pay for it. You could see a number of pocket pivots of late. Everything is green. As we showed you, good earnings per share growth. You can see it's hit the high jump and pull back, following a Bible gap up, but it's not at the high jump yet. Another pocket pivot. I think this thing continues to run. It's one of my favorite in the pharma world, and they use their money to buy companies, not to pay a dividend. ROE of 36. Ian likes that number, I bet. And let me see if there's anything else here that I thought was interesting. I don't think so. So let's go back, and the next. This is what top-down investing is. You look at the best industries, and you see what's good. Oil and gas exploration. They moved back. They were down for a while. I'm seeing Chesapeake. Chesapeake may be one of those the CEO leaves and the stock trades up plays, which I think is what's been happening here. Oil's at 90 plus. I did see more energy stocks when I did my review this week, and I think I picked a couple. I think one of the ones that I picked was EPL, if I remember correctly. I liked the lower left to upper right. It had viable gap ups 2 days in a row. I have to ask Gil what that means, if that's a good thing or a bad thing. Everything is green. Kahuna's, huge volume coming into the stock. Trades at great earnings per share growth. Sometimes when it's that great, I don't trust it. So let's just jump into MarketSmith, EPL. Look at the earnings per share growth. Look at the PE. $5 at 15 is worth $75. It trades at 25. Obviously, there must be a reason why it only trades at 25. Worth doing your homework on. But if you want to look at gas and exploration play, that was my favorite from looking at it. This one I spotted a couple of weeks back. I think we talked about one of my webinars as a bottom fishing candidate. I love bottom fishing. I see a double bottom here. I nibble. And I nibbled here, and it's having a nice run up here. It's going to have to get above the 200-day moving average. Something's going on here when I look at the earnings, and I can't remember this one's earnings. I bought this because of its pattern, not because of earnings. But I think earnings were coming in. Yeah, huge earnings coming into this stock. So if it gets above the 200-day moving average, it might be worth nibbling again. Why do I say if it gets above the 200-day? Because they have a tendency to hit the 200-day and drop down. But this one I think has a lot of earnings momentum, so you might want to be watching that one. Maybe Lou Powers, if he watches this video tomorrow, can comment. Semiconductors, seasonally a weak time for them. I hate this company, Micron, because I lost a ton of money when the tech went crazy and I was stupid. And it's in a nice move. I think there's been some mergers and acquisitions within the semiconductor space, take out competition. It's just like the airline stocks go up. All green. I don't like the earnings per share growth and momentum, and like I said, I've been burned by this stock before. Cree is one that's getting a lot of attention. I don't know if it's going to form a flag here or it's forming a top. It looks like a bearish engulfing pattern, although everything is green. It had a bullish, a Bible gap up on Tuesday with a big volume day and a kahuna. So this may just be a flag or a pennant that forms here, and then it runs again. It needs to blow off some of this top as it's at the high jump. Great earnings per share, and this is a sector that might be doing some turning around. Here's another one that had a Bible gap up on Thursday. Pretty incredible earnings per share. Don't know much about this stock. I may take a look at it. This MTC. A little bit of earnings growth, not much. Trades a little bit less multiple than its earnings per share growth. A lot of ugly charts on the semis. The Bible gap up is interesting. Let me see. No, that's not what I want. My bad. The Sears logic is one that defies logic. I don't always recommend buying downtrends, and it's clearly in a downtrend. Got a green candle low on the weekly. It's got a green candle. It didn't quite have a green candle low on Thursday. As I said earlier, every once in a while I like to fish around at the bottom, and this is one that looks to me like it's in a bottoming pattern. It has fairly good earnings per share. I think it's tied somewhat to Apple, and with Apple's projections and numbers coming down, it slowed down. Obviously, the PE's at risk because the growth rate's going to slow down, but even 8 on 350 is $28, and the stock is trading at 23.24, so that's a 15% potential move or more. I just get the sense, for whatever it's worth, that this thing is trying to find a bottom here. Might be something to nibble at. I always like to take a flyer on a bottom fish, and I've identified a couple of them for tomorrow. Again, not high growth stock investing, but it's been good for me. Biotech, one of my favorites. Don't know much about Celldex, but several of the others there are some of my old friends. Let's look at them very quickly. Celldex is having a big run. Bible gap up, Bible gap up, Bible gap up. Huge volume. Kahuna on Friday moved up to $12.50. I have no idea what they do and what's going on. Something's going on, whether it was a good earnings call or something. Probably worth doing your homework if you have interested on that one. Vertex, leader in hepatitis C, had been marred in a slump. Got above the 200-day after a pocket pivot. Let's take a look. There's something going on with their earnings that might make me more interested than it looks. It's a great company with a great pipeline. They don't make money, so well, in 12 they made money because I think they hit some milestones, but not making any money going forward. Marketed products cap of $12 billion, maybe an acquisition candidate. I like things when they get back above the 200 when they have strong group strength. Onyx, I think we looked at this last week or 2 weeks ago and talked about its pullback to the 200. It got above the 50. Nice move up, not quite extended, had a Bible gap up off of that 200-day moving average with a kahuna and huge volume coming into the stock, which was a great buy signal. Celgene's been my favorite of this market. I don't think it's done yet either, but it's a lot less of a reward now than when I put my original buyout on the board when it dropped down to 56. Close to the high jump bar, all green's got some readouts of major studies coming in, has a good earnings per share growth rate for a big stodgy biotech. Gilead is, Kramer actually said on one of his shows a couple weeks ago, come out of Celgene and go into Gilead. Turned out the right call would have been double down and have both. Be nice to get this back at its 50 if you can, but it's having a nice move, and they have a strong hepatitis C and AIDS portfolio, and they've been acquiring oncology companies, and they've got the neat one coming. So that might be one to watch as well. All right. This is what I do. I go through the top groups, I build a watch list, and then I figure out what's going to make me buy them. Construction materials, this has been a positive area. Last week, I think my stock pick that I focused on, I focused on the whole home builders and the refiner sector. But this was one of my favorites. It was coming off of a pullback to the 50-day moving average, and it had a really nice move this week. It's not a huge move because it's not trading. Well, from a dollar, it had I would say a big move for a stock this much. It was up 7.5% in 5 days. I clearly will take that. Up pretty much every day except for Wednesday when it was down just a teeny bit. But obviously a very nice week on that stock. Not up to the high jump, great earnings per share growth, all green on the momentum. I think that's still a very viable stock. And that's about it on that one. We like that. There's cement and other materials for construction. And last week we talked about home builders. I'll show you a little index I put together. Let's just take a look at the home builders real quick. I think I saw them here. Yep. The ones that were leading in the past may have flipped around a little bit. But you can see here's a lot of strength in KB Homes. They don't make money, but their losses are getting smaller, I guess. Lower left, upper right, pull back to the 50, had a pocket pivot on Friday. Interesting, D.R. Horton is the one that had beat its earnings nicely and raised guidance. Still had pulled back to the 50. Would have been a nice time to get into them. Had a nice week, though, as you could see. And the ones that were running, Lennar and Pulte, a little bit deeper pullbacks, undercutting the 50, but got above the 50 on Lennar. And Pulte Home pull back to the 50 basing, still lots of earnings power. I still think these guys run again. Argument was made by the guys I saw this weekend that housing stock are going to be bad. They looked at some housing stocks in Japan when their market rolled over. And with the baby boomers getting into retirement age, who's going to be buying expensive houses? He's not wrong. He made a good argument that you need to be looking at places where retired people spend money and that some of these houses may not, and that the biggest growth has been in multifamily. Veritage has a lot of strength, good earnings per share growth, number of pocket pivots at the end of last week. Looks like it wants to run as well. So I still like home builders. And let me see if there's anything else here I want to look at before I go to the short side. It kills me to own airline stocks, but I'm owning airline stocks now. Look at the moves this week with United buying, with U.S. buying American. I wouldn't be shocked if we see further strength in this group. You're taking out competition. And I fly almost every day. There's not a lot of empty planes, and the ticket prices are going up. So pocket pivot after a big run up 50% on Delta. Look at its earnings per share here. Clearly a turnaround play as its earnings growth had slowed down the last quarter. Let's, out of curiosity, look at MarketSmith, DAL. This is where I do most of my flying on, so I'm doing my part. Keep the 9, multiply it by 3. You got a huge amount of gas in the tank in this stock. I'm long. I think if you're not in an airline stock, Delta looks good. United, historically, has just been a dog, but I think that you've gotten to the point that everybody said you needed to get to, which was to see enough consolidation and seats come out of the market that it had no choice but to have prices go up and stability. Just real quickly, let's see where the money was moving out of at the end of the week. Only 3 groups: consumer finance, independent power producers, and residential REITs. So, strong market. We've looked at a number of stocks. It's already getting late in the night. One of the things that HGSI allows you to do is to make your own user groups and make your own indexes. So what I did last week is I took a lot of those home building stocks that I thought were, take off my filter. That's fine. Scorecard, no index. That I thought were moving. Actually, I want the index. And I made my own little index to see how those stocks did for the week. Now I'm putting together another index, which I didn't have a chance to finish before the concert, which is my leaders index, and I'm going to watch that knowing that when the leaders roll over, it would be a good time for me to think about getting out of the market because the leaders usually fall the hardest and sometimes fall first. So these are some of the stocks that I picked last week. And you could see that characteristically there was a lot of pullbacks, 1, 2, 3, 4, 5. So from, open this puppy up, from the close on Friday to the close on Friday, this group was up 2.5%. That's only 5 periods. That's how about that? 3.6% over 5 periods. So this group of home builders, remember I talked about this last week, that home builders and everything like home builders. You got construction company, you got diversified chemicals and plastics. They make a lot of the piping, Trex, the stuff outside, United Rentals, the equipment that they use to dig the holes, Cons, they make the electronics, Union Pacific, which I think also looks good this week, makes the trees or grows the trees. USG makes the gypsum, which I guess goes into some of the boards. Still like this stock, sort of a, here's your hockey stick, another hockey stick. Looks like it wants to run again. Great earnings per share growth. Louisiana Pacific Corporation does not pay a dividend. Back here, and then some of the mortgage companies buying up mortgages. These guys had a tougher week, although as a whole, up 3.7% in 5 days for the housing index. All right. Couple of shortcuts, then I'm going to say goodnight. I haven't done my my GIF yet, so let's do a quick group inclusion filter. Let's go into the go into the designer. Go up to the top here. Let's go into smart groups and group inclusion filter. Clear. So I'm going to pick some of my favorite long groups, Bible gap ups, pocket pivots, and I'm going to see if any stocks are in multiple groups, and which stocks are in the most groups. Best of Woodward and Brown, best criteria, ERG 240, growth, HGS 100, leaders, quarterly EPS, stocks upside. Okay. I'm going to make a group from report. I'm going to call that group AAA Web Gem 3.10. I want to look at the top 10 stocks. I'm going to hit OK. And what this is doing is it's looking in all those smart groups, which are automatically done for you every night, and finding out if there's any stocks that end up in multiple groups. Well, lumber liquidators, they make wood for the houses. Eagle Materials, Ryland is a builder. AZZ makes electrics. LinkedIn, On Assignment, Railcar. These are the top stocks that we found that way. So let's quickly run through them, look at one other view, and then most likely say good night. I'll find this in, here they are, 10 stocks I looked at. Lumber Liquidators was highly ranked this week. I think it's on my buy list. And you could see not much of an angle, but it's grown from the low 50s to mid 60s, pulled back sharply, trying to run again, all green, not up at the high jump, good earnings per share growth. We've already looked at Eagle Materials, one of my favorites. AZZ, same lower left, upper right, little gap up on Friday, not near the top. Nice earnings per share growth. Sinclair Broadcast, I probably would like, to look in my buy list. There's another one I like more than this, but big run up here, up at the top of the high jump, but looks like it wants to run again. No earnings per share growth. I wonder if there's a buyout there. Ryland is one of those houses. Great earnings per share growth, got above the 50, might be interesting. Lionsgate, this is the one I like. Remember Virgin Media was doing this, and I kept questioning why and telling people they needed to get into it. It got taken out. Another nice move here off of a pocket pivot and a big kahuna. A nice run up here, sideways for a couple of days. Looks like it wants to run again. Great earnings per share growth. On assignment, temporary help had pulled back pretty deep in the correction, getting up to where you might expect there to be a triple top and some resistance. Not much earnings per share growth. I'm not sure I'm going to trade that one. LinkedIn, I don't understand this on the earnings, but I use it. I get lots of interest. We look for people we want to hire there. If I leave my job soon, I'll be on there looking for people to hire me. Social media for working people. Morales and Catcher loves this. Bible gap up a few weeks back, and look at the nice run it had since then. American Railcar. This Trinity, which is one of my favorites, and I'm going to look at that when we get through with this 10. Someone's got to make the trains to haul the oil from the shale areas to the refiners, since we don't have Keystone and other pipelines built, and they've been on a tear, and this whole group has been on a tear. Avis budget, lower left, upper right, don't know much about the industry. I use Hertz, but that doesn't mean anything. And then I mentioned Trinity. Let's just take a look at that real fast. What a nice bull run. I'll break above the 200. You see the Eureka's telling strength in the market, and just a number of pocket pivots and a very powerful move. Two more things. I'm going to look at all groups, or all securities. Go into view. HGSI strategies, Woodward and Brown, miscellaneous, the reference library, miscellaneous. Let's look for sprinters. You want a simple thing that's going to find you a bunch of good stocks. This is one of the tools that I use. I found 93 of them on the last run. Many of these we've already looked at. It gives you an idea of which are good fundamental and technical stocks. Look at a couple broadcasters right up at the top. Didn't say much about refiners today. They're getting long in the tooth and their earnings per share growth is stopping. Doesn't mean that their run is over. They've really had a huge move. Pocket pivot on Belk. Still has great earnings. This one's probably got the best earnings of the bunch and pays a little dividend. And lastly, just show you, so Sprinters is a simple tool like the GIF to find some great stocks. And lastly, I'm just going to put my buy list on for a couple of seconds as I say goodnight, and you can always pause. And these are some of the stocks that I found on my review. Remember, as I said before, I do like to eventually bottom fish, and I haven't had a chance to break these out into groups yet. But you know, if you have interest, you're certainly welcome to look at what I do. Here's my. These are the stocks that made sense. Many of these we've already looked at. I'm going to look at Manitowoc, I think, and say good, and Wabash, and then say good night. Take a little picture in your mind. We looked at a bunch of those. CF is not necessarily a buy. It's a bottom fish, as is 3D Systems. It just looks like it wants to turn around. Louisiana Pacific is one of my favorite charts. We just looked at it. Last two, Manitowoc, and then Wabash National. Great earnings per share growth, lower left, upper right, had pulled back. This is a construction play, pays 1.6% dividend. Construction, farm machinery, and heavy trucks. If it can get above this level, I think the stock has some more room to go. And when I looked at it on look at this earnings per share growth. 25 times $1.75, that's too hard, times $1.80 is 25, is a $45. The stock, if it hits its earnings, I think has huge growth potential. Gas in the tank, to me, is simple. And I'm not sure I'll get the story here. I've got 52 cents coming in, and I've got 33 cents dropping off. 52, so the March and the June quarters will fall off. 15 and 37 come on, so 52 cents minus 33 from 52 is 19. Okay, 19 cents times a multiple of 25, it's about $5. So even if there's no multiple expansion, I expect over the next 6 months to potentially see the stock go up 25% from here. Like Manitowoc a lot. And then here is one of the ones that I like that's been pulling back. So here's my hockey stick. Something happened here on Friday. Great earnings per share coming into this stock. Viable gap up. Broke above the 50. Big kahuna, huge volume. And I think earnings came out as what propelled it. And if you think this is a bank, you're wrong. It's another construction and farm machinery and heavy trucks. Something's going on in this sector. Cummins being the leader. On that note, I'm going to go back to one of my slides. Have a great night. As it says here, be your own guru. Investing's a business. Make sure you got the right employees. Keep your education up. Trade the market we have, not the one we think we should have. And one more shameless plug. This is probably the last one. These guys are outstanding, great value. If you're going to Greg Mills's meeting and can't get there to Saturday, I've got some arrangements for you, including a special educational session so you don't miss anything. And an adjustment in price, please reach out to me. And we'll see you all next time. Have a great night, and thank you.